This video is sponsored by Moomoo. Use that link down below or simply go to StockSurfast.com/Moomoo and you can get up to 16 stocks, each of which could be valued up to $2,000, guys. And depending on how much money you deposit, you get a free share of either Tesla stock or Google stock guaranteed. So get on it, guys. Use that link down below or just simply go to StockSurfast.com/Moomoo. And with that being said, enjoy your free stocks and let's dive into the video. So although the bulk of earnings season is pretty much behind us, right, guys? I'd say 97% of earnings season's pretty much behind us. We still have a couple companies that I want to break down in this video that are set to report earnings this upcoming week. The first one being, let's just dive into it. And by the way, if you guys find value, smash that like button and make sure to subscribe. It's free. I appreciate all you guys. As always, the first one is none other than GameStop. You heard that right, guys. GameStop, ticker symbol GME. They're set to report earnings, I believe, on Tuesday. Of course, Monday, tomorrow, we have the the day off, but we're still making this video, of course, and we'll probably make some more videos tomorrow on Monday. But on, I think, Tuesday or Wednesday, GME set to report. Either way, they're this upcoming week, and this stock has been destroyed. Let me actually show you the exact date, the 6th, which is, I believe, on Wednesday. Yeah, Wednesday after the bell, we have GME set to report, and their stock was at $29 back in the beginning of June. Now we're at what, $18.40, $18.50, down about 35%. So GME is not looking so pretty, guys, and we're heading into the earnings here in 3 days in a downtrend. So keep that in mind. And let me actually come over here to Chrome and show you guys, or Safari, either way. We can see the numbers here, the estimates, all that good stuff. So their market cap right now, as the stock has fallen around $10 over the past couple of weeks, is sitting at about, let me see here, guys. Where's it at? $5.6 billion. And of course, their beta is negative 32.32. We're not going to get into that in this video. And they're losing 67 cents per share in EPS the last 12 months. So, of course, they're not profitable. Will they ever be profitable again? I have no idea. Of course, nobody knows the future, but they're not profitable right now based on the last 12 months. And on the analysis tab here, we can see they're looking to do EPS of negative 14 cents based on 3 analysts. And a year ago, they lost negative 35, or they lost 35 cents. So year over year, from negative 14 cents, which is what's projected for this quarter, and last year it was negative 35 cents, the loss is narrowing, which is a good sign. Loss is narrowing year over year for GameStop. And when it comes to revenue based on 3 analysts, average estimates $1.14 billion, the low estimates $1.13, the highs $1.16, and a year ago they did $1.14 billion. So in other words, guys, well, revenue is going to be flat year over year, which is not the best thing, but honestly, not the worst thing either. Not the worst thing either, if you ask me. So going back to the charts here, guys, let me actually set my alert at this 180 SMA on the 4-hour time frame, which is right around $21. Let me do that now. Mark is out or above. If that point breaks, guys, maybe we start to reverse to the upside, but we're nowhere near that point yet. And sure, we have recovered a bit here from 1620 to where we are at 1850. That's nice over the past couple of days, but not a clear-cut, full-on reversal to the upside, at least in my opinion, quite yet. So that's the first stock here, guys. GME is the ticker. The next one is Dave and Buster's, guys, which, funny enough, I was at Dave and Buster's yesterday for the first time in a while, and funny enough, this company set to report earnings this upcoming week. Let me actually pull it up on Yahoo Finance here, guys. Let me get it ready. There we go. So Dave & Buster's, their stock is down from $47 a couple of weeks ago. Now we're sitting at about, what, $40? So in other words, $7 down, or 15-16%. Not bad. It's not quite yet in a bear market, but it is in correction territory ahead of these earnings, which I believe are on the 5th. Let's see here, though, guys. Give me a second. If this thing wants to work, come on. Looks like the 6th, actually, which is the same day as GameStop plays, or Dave & Buster, their ticker symbols play, if you guys didn't know, PLAY. They're set to report on the 6th after the bell. So they're down a good chunk here. We do have a golden, or not a golden cross, a death cross, guys. Don't confuse those two. They're different. They're the opposite thing, right? We do have the 50 SMA crossing under the 180 SMA, which is that death cross. So this is one that I'm watching here as we are kind of consolidating at about, what, $38, $39. You guys see that? right here. That was the high from the middle of March all throughout. It looks like the middle of May, right? We can see we peaked at that point for months, and now it looks like we're holding it, and maybe we get that sharp bounce to the upside, but obviously it all comes down to earnings, which let me actually pull up the tab here. Give me a second, guys. We can see Dave & Buster's, their market cap right now heading into earnings is sitting at, what's it at? 1.7 billion. Wow, smaller than I thought it would be. 1.7 billion. The P ratio is a 13, so I don't know, is that high? I mean, maybe, considering they're probably not growing much right now. Let me actually see, though. I can't say that without looking deeper into it. EPS trailing 12 months is at $2.92. Not bad. $3 roughly. So if I come over here to the analysis tab, we can see that last year they did 59 cents in EPS, and now on average, based on 9 analysts, they're looking to do 93 cents in EPS, excuse me, guys, which is looking pretty good. And I'm actually wrong. I'm sorry about this, guys. I'm wrong. They are growing 20% on average when it comes to revenue, the projection that is. They're looking to do revenue of $559 million. The low estimate's $549, the high is $565, and last year they did $468 million of revenue, so up 19%, not bad. And the next stock here, guys, let me actually pull it up. First here, guys, there we go. It is ChargePoint, ticker symbol CHPT. Their market cap right now is at $2.62 billion. EPS trailing 12 months is negative $1. They're losing money, of course, not a surprise at all. And when it comes to their analysis, guys, for the upcoming quarter, which I believe they're on Thursday or Wednesday, one of those 2 days, we'll take a look here in a second. We can see on 9 analysts, or based on 9 analysts, EPS estimate on average is negative 15 cents. All right. Last year they lost negative 18 cents, or they lost 18 cents. So that did narrow a little bit, but still they're losing roughly the same they lost last year. And based on 14 analysts, when it comes to revenue, they're looking to do $153 million. That's the average estimate. And last year they did $108 million. So year over year, guys, ChargePoint, man, 41% revenue growth expected. Not too shabby at all, if you ask me, guys. And let me actually show you here what their chart is looking like. I actually haven't talked about ChargePoint in quite some time here on the channel, guys. Let me pull it up and show you. CHPT is the ticker. This stock has been destroyed. Now it's at 740. It's in a downtrend. It's been downtrending all year, so maybe there's something here, guys. Maybe there's something here worth looking deeper into. We have earnings again, I believe, on the 6th. Yeah, that's on Wednesday after the bell. So ChargePoint, watch out for it. DocuSign is another one. Let me pull it up and show you guys another one that's been hit very aggressively from $70 back in March. Now it's at what, $51? It is down roughly 25%. In other words, throughout the course of this year, it is in a bear market, guys. You heard that right. Now we can see we're in this, we have this channel, right? Boom, you guys see that downwards channel. And we also notice here earnings, I believe, on the 6th. Let me double check. 7th, which is on Thursday after the bell. So at this point, we are above the 180 SMA 4-hour chart, above the 50 SMA. Looks like, yes, we're still on this downtrend, but we could be playing in this window right here. Let me show you guys this. Boom. We could be playing right here, right? Maybe we do see some more upside on DocuSign heading into earnings, maybe pushing it towards mid-50s, maybe higher 50s. We'll see, guys. That is DOCU. Let me actually pull it up here on Safari and show you guys these estimates. Give me a second here, guys. Bear with me. The ticker is, again, DOCU. And by the way, if you guys are finding value in this video, make sure you hit that like button, run the likes up, make sure to subscribe as well. I appreciate you all. As always, our next goal is 50,000 subscribers. Of course, we just hit 30,000, about a week ago. I appreciate you all, as always, for 30,000. And, of course, we're never stopping, guys. We're never stopping. So 50's next, followed by 100,000 subscribers. So DocuSign, their market cap right now is what? $10.45 billion heading into earnings. EPS trailing 12 months, negative 37 cents. All right, they're losing money. And let's pull the analysis tab up and see here. It looks like based on 19 analysts, average EPS estimate is 66 cents. And last year they did 44 cents. And it looks like here revenue $677 million versus $622 million from last year. And that's going to be up, 8, 9, 10%, right in that ballpark year over year. So not bad for DocuSign, guys. Not bad. Looks like they're growing EPS and revenue year over year. And their stock price, although it's been downtrending for quite some time, it could be reversing here fairly soon. Keyword is could. Of course, nothing's guaranteed, guys, in the stock market. Please do your own research. Please, guys, do your own research. And the next one here is RH, Restoration Hardware. Their market cap, $7 billion, right? P24, not bad. Probably a little too high, if you ask me. And EPS trailing 12 months, $15.50, which is not bad. Pretty profitable company here with RH, guys. Their analysts, or 17 analysts, they think average EPS is going to be $2.56. A year ago, they did $8.08. Holy smokes, guys. And it looks like here on revenue, $784 million is the estimate here. Boom. You guys see that? Last year, they did $990 million. Oof, that's rough, guys. So think about that. Restoration Hardware, sales are down 20% year over year. Not the best sign. That could be an economic indicator right there for the consumer, right? People aren't buying houses. They're not buying as many products from Restoration Hardware, right? That's the reality here of the matter. So we're noticing that, their sales, EPS, not going to be good at all. And if we come over here to the charts, guys, let me pull up Restoration Hardware and show you how their charts are looking, or how the stock is looking. RH is the ticker. We can see here this thing's been doing quite well, funny enough. I mean, this thing was at 227 a couple of months ago. Then we hit 406, pulled down to about, 330. That was a drop of 19%. Got almost into a bear market there. And now since that point, we've bounced. We're getting buying pressure. We popped off the 180 SMA, broke over the 50 SMA on the 4-hour chart. And, this looks like it's on a one-stop shop to $400, $405. But with earnings coming up, that could throw a wrench in that, what I just said. Maybe it doesn't go to 400. I don't know. But they're set to report earnings on the 7th, which is on Thursday, after the bell. So keep your eyes on Restoration Hardware. It went up 4% on Friday. Not bad. Will it continue this uptrend? Time will tell, guys. Time will tell. Ticker symbol RH. And the last one for this video, guys, which, if you stuck till the end, I appreciate you guys, as always. Cheers to that, man. I'll give you an empty water bottle cheers over here. Actually, I have a little bit of water left. Cheers to that, guys. And now let's talk about the last one, which is Kroger. And they're set to report, I believe, on Thursday, right? Or Wednesday. Let me see. Actually, no, Friday. Looks like here Friday after the bell, or actually no, before the bell, of course. They're set to report earnings. So Kroger stock, KR is the ticker, by the way. This has not been doing that well, especially in the past roughly month. It's gone down from $50 to 45. That's down about 9%. Not the end of the world, but still pretty much on the cusp there of a what's it called? The correction. And we could also see here we are arguably trading in this channel, right? I know I just butchered that, but you guys see that. So we're noticing we're dumping down. We do have a death cross. We're under the moving averages, so keep that in mind. And let me actually pull it up here on Yahoo Finance. Give me a second, guys, so we can see what's going on here with Kroger. And of course, you guys know Kroger, the massive grocery chain, whatever the heck you want to call it. Massive grocery chain. So their market cap, last I checked, was like $40-50 billion, something like that. Let's see what it's at now. $33 billion. Okay, maybe it wasn't $50 billion. But either way, it was in that $40 billion range. So it has come down a little bit over the course of the last couple of years. I believe the all-time high on Kroger stock, $60-70, something like that. Yeah, $62 it looks like is the all-time high. So look, Kroger right now, market cap $40 billion, $35 billion, whatever it's at. P ratio 13, EPS trailing 12 months, 350, not bad. And when it comes to their analysis, let's pull this up and see very quickly, guys. Based on 17 analysts, right, 91 cents EPS on average, which is pretty much right in line with what they did last year, 90 cents, right? And based on 14 analysts, boom, you guys see that. $34.12 billion of revenue on average is expected, and last year they did $34.64 billion of revenue. So that will be down 1.5% year over year, guys. So there you have it. There you have it. Those are the main stocks I'm looking at right now as we are getting into really the first full, well, I guess technically it's not a full week, but we're getting into, one of the first weeks here of September of, trading here, which is fantastic, guys. I'm pumped. So what do you guys think? Let me know your thoughts in the comments. Hit that like button. Make sure to subscribe. And don't forget to get up to 16 stocks for Moomoo, guys. Each of those could be valued up to $2,000. Just check out all the details. Link down below. And if you deposit at least $100, guys, you're getting 5 stocks, each up to $2,000 right off the bat. So make sure you all do that. Link down below. And of course, don't forget to follow me on Twitter as well, or on X, whatever the heck you guys want to call it, at StasserFest or Stas Talk Stocks. You'll find me on there. That's linked down below. And with that being said, I'll catch you guys later.